Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we'll make this a quick recap, a very quick recap. So essentially, we're going to start off looking at the dollar, and the dollar is still within this squeezing structure. So we do have these higher low pivots from these lows down here, and currently we are attempting to hold this structure here. So it's very immature currently. So we've made the high here, took out these previous highs right here, okay, and then we made another equal low structure here, and then we made a lower high structure here, and now potentially the higher low structure here. I would say this has confirmed, and now we're looking to build out a potential structure that will have more upside. Now, will this upside lead to the taking out of this pivot, or will it lead to another high, lower high structure and then another higher low? That's definitely in the cards as well. But either way, we are coming closer and closer to the end of this squeezing structure that we've been building for the past couple of weeks to months here, okay? So overall, as long as we're within this general structure, this general zone, I would expect for assets, risk on, risk off, to still, to generally have less selling pressure on them, and that's what we're kind of seeing today. So overall, today's been a pretty positive day, and I would attribute this mostly because the dollar's been fairly neutral in the sense that it's still within this structure that's building. But like I've been saying, I do think you should have a bull bias on this structure because it is more likely that we do break up to test the daily downtrend line and then theoretically break through that to the monthly bearish fair value gap, and we do actually breaking down. But of course, either are in the cards. It's all probabilities, no guarantees. Okay, now let's go over to the Dow and check out what's going on here. So Dow's having a great day. Had a really nice pivot on yesterday, nice little bull doji, and now we're getting a nice bullish engulfing move. So, in my opinion, we're looking good for more upside to come back towards the top sides, the top side move towards like 34,500. Sorry about that, guys. 34,500 to maybe even like past 34.5 and going back towards the top side of this larger fair value gap to test out these wicks. But I do want to mention something before we go forward here. If we take a look at the Dow on the weekly, so let's go on the weekly and we go on the monthly, notice what's happening here, guys. So I have talked about this on the Discord during some of the live streams. In case you haven't joined the Discord, make sure to do that. It's free. You'll find the link in the description below. You can join us in our live sessions where we talk about cryptos, stocks, everything really. So make sure you're in there. You'll miss out. You'll get a lot of content. If you're not in there, you're missing out. So look at the Dow here on the weekly and the monthly. Now, I can't say this is bearish at all. And what this implies is the highs here are actually being targeted, okay? Now, I'm not saying that's what's going to happen, but this consolidation here over these like past couple months, we're looking at 1, 2, 3, 6, 7 months, okay? We're looking at 7 months here currently of trading virtually sideways. And if you look at the weekly here in a squeezing like structure here, okay, this is starting to look really, really bullish. And if this does have validation and does break up to the upside, I got to tell you, it's going to be really hard to stop this momentum somewhere around here to make a macro lower high. But if it does take out the highs, that calls into question a lot of things in regards to not just the stock market, but even crypto. Because if the Dow starts taking out its all-time high, well, are we in a bear market, right? Or are we in the beginnings of a bull market? Again, that's the question that we should be asking ourselves. However, don't become obsessed. Always trade level by level. Look for the liquidity zones. And if we are in a bull market, that's great. If we're in a bear market, that's great too, because we can trade both directions, right? So overall, though, I got to tell you, I'm pretty bullish, considering how this has been maturing. And this retest here of this breakout line here of the structure and the liquidity levels down here on the daily are extremely, extremely attractive for potential more upside. Okay, so we'll see how this week closes out. We had a strong sell-off in the last week, but so far we're trying to recover that candle. So we'll see how we play as we come into the end of this week and also the end of this month. But overall, we're looking to confirm this higher low pivot from this low here. Okay, and now we're likely gonna at least try and challenge this high to make another higher high going up towards about 34,500 to as high as maybe 34,800. Okay, now let's take a quick look at the S&P. So S&P, beautiful, beautiful bullish engulfing candle here. So a lot of bullish momentum's coming in today, and I gotta tell you, I've been looking at some of the level twos and some other data sets coming into the market. There's a lot of big money flowing into the markets today, so we could be seeing an extended move for the rest of the week here. Really attractive again, just like the Dow had a beautiful break, retest that break and pop up, and just been pretty stable ever since. And after coming back into here, testing these fair value gaps right here, so let's actually pop that on the chart here so you can see. Again, I know I have a lot of stuff on the chart, but here is the little fair value gap it tapped into, very small, but tapped right into it and then popped up. We are looking for continuation, okay? So now this may not mean that we get immediate continuation to take out the high here, but what it does mean, it's very likely we're going into consolidation, and the consolidation will have a bull bias considering how much we've moved up. We'll look for something like this and then potentially upside, okay? So this is really, really healthy looking on the S&P. So if you're catching the theme here, I'm actually more bullish than I thought I'd be at this time. But I have been saying, if you go back into the recaps, I did think the summertime would be bullish, the Junes and Julys. But at this level, I'm surprised it's happening here. I did envision us lower, but here we are. So we'll see. Are we going to actually make it up back towards these levels, back towards these high pivots up here and here? Potentially, that's the next level, because we have taken out this high pivot here. We have filled out these liquidity zones. So if we're going to go after any more liquidity, it's going to be the buy side liquidity above the pivot here, 4,500, and this one up here at 4,630 or so. So we have some interesting times ahead of us, guys. So we want to make sure that we keep our eye on this. We don't want to put any expectations on the market. You never know what can actually happen. Things can go up much higher than you think, and assets can go down much more than you think. So you never want to put any expectations on anything in regards to the markets, because it's all probability. So it's really, really important we remember that. But so far, it looks really good. The weekly right now does not imply continuation in the short term. We are looking for some sort of consolidation to potentially begin on the S&P, but it looks like it will be a bullish bias if it does consolidate here. Next is the NASDAQ. So looking at the NASDAQ, very similar to the S&P on the weekly here. Beautiful break out of this channel and made it all the way back up. And we haven't tapped the fair value gap here yet, but we are very, very close. If we go down to the daily time frame, again, came back into this daily fair value gap right here. Again, very, very small, but let's pop it on the chart just so you get a visual right here. You see how it overlaps with the previous fair value gap we had, but that's already been filled. But right here, tapped into it, and boom, nice little pop up. So we are looking for continuation on all of the indices so far. And if we do have continuation, especially in the Dow, it really implies the all-time highs are at risk to be getting taken out. For the S&P and NASDAQ, there's a lot more room to the upside before their all-time highs get hit. So we don't want to go full bull mode yet. But I will say this is very, very bullish looking at these charts from the daily, weekly, and monthly perspectives. Okay, now if we are going to have a failure here, let's just say this is just a bear market rally. Again, anything's possible, but let's just say it is. Well, this will be around the zone where we would likely fail. Going towards the 15,000s, maybe even like 15,700. Just not taking out this high. So we could be in that scenario. I'm not saying we are. I'm not saying we aren't. But if we are in that scenario, where we are now to maybe slightly higher is where we would look for the NASDAQ to fail, maybe even going back to the 16,000s. However, the Dow really puts that into question, because the monthly chart does not imply some sort of bear market rallies happening or some sort of higher, lower high on the macro is going to happen. That looks like bullish consolidation on the monthly chart, as well as a very, very, very bullish bullish structure that's on the cusp of breaking on the monthly. Like, this is nearly done, it feels like. But again, we'll have to end up waiting, just like always. But look how close it is to its all-time high. So it's really not that far away from a monthly perspective. So if this does end up validating as a bullish consolidation and breaking out, then I don't see any way that the high here doesn't get taken out. So that's going to really imply that the S&P and NASDAQ are also going to have more upside. So it's going to be a very interesting time, and we'll keep our eye on it. So now let's go over to oil and see how that's playing out. So we are getting some selling into the oil chart. Let's go down to the daily time frame and coming back into the lows here. And again, it's still consolidating, as we've been talking about for the past couple months. Not going to really be leaving here anytime soon, in my opinion. And notice that this consolidation is getting a bit of a grind down. So if you kind of see, the skew is coming down a bit. So I am looking for this to actually break lower here. But once we break lower, look for another pop up, and then just kind of keeping this energy for quite some time as we go further into the summer. And that'll be the next real big litmus test of the oil chart. As oil demand grows in the summertime, will U.S. oil start breaking up? In my opinion, it will, but again, time will tell. Nothing more to say here as we continuously hold these levels and then trade within this larger blue zone, which is like a 5+ year support zone. All right, next is gold and silver. So looking at gold, again, continuously trading within the zone we had, 1930 to 1890. So we're going to stay in here for a while, if I had to guess, which is what I've been saying for quite some time. I do expect us to trade sideways in here for quite some time. And then I would be looking for a more bearish, like a more bearish structure kind of getting built here, a bearish consolidation, at least a bias to lean towards the bear side, to then lead to continuation sub 1890 and going into these larger daily fair value gaps to really eat up the liquidity here. And once we see any sort of evidence of the downside selling is going to stop, especially if we're down here, we definitely want to make sure we jump on. So if you're in the swing trade service, be on the lookout, like GLD, gold mining stocks. Those will be my targets the moment I get evidence at these key liquidity zones of a reversal to the upside. Okay, next is silver. So silver having a nice little pop-up on the day. Again, kind of relatively strong compared to gold today, which is not too surprising because it's been relatively weak for a long time. So it having its day here and there of bullishness is not too surprising. But look what it came right back to. Came right back to this ascending trend line here. This is why I'm keeping the trend line on the charts, guys, because I want to show you that even failed patterns, failed structures, their trend lines will still play a role a lot more than you might think, right? And we went over this last recap. You see the price action come here and respect this level, came back, held it for a little bit, broke under, then came back, retested it, broke up, came back, held it, broke up, came back down, came through it, and now what is it doing? Came back up and retesting it as resistance. I mean, and this trend line doesn't seem relevant at all, right? But it's been almost like this median through line all this price action here, right? So it's pretty incredible. This is why I like to keep the trend lines on here, just so you guys can get a visual. And you want to get used to seeing something, and it gives you more and more faith, more and more confidence that, okay, this thing does work. This thing does actually have a use. Whether it's your style, whether you enjoy it or not, is a totally different thing. But you do want to try and get used to seeing how price action interacts with certain tools, certain indicators, if you want to use indicators, or certain patterns. You got to get used to it. You got to get to the point where you have confidence in X so you can keep doing Y. Okay? All right, next is Bitcoin. So let's take a quick look at what's going on with Bitcoin, see what's going on with crypto. So if you're in the swing trade service, we're long in everything. So we don't have any shorts at the moment. We're only long, and so far we're sitting in the money for most of the positions. We're very, very good positions at this time, and the positions we're not in the money in, it's pretty small. So it's been a very good time in crypto. So if you're not in the swing trade service, I think you should check it out. It's about $40 a month currently, and it's quite good, I would say. We actually recently had a loss here, not too long ago, but we had gone for a very long time of no losing. So we had a loss this month of TON coin, lost about just under 3%. We also had a break-even trade on Algorand, but most of the month has been extremely positive, and this was our first break-even trade ever since the service has started, and this was also our first loss since all the way back here in 2022 on Luna, right? So we had about a 5% position. We lost just under 72% on that 5% position. So this was the only loss we had. It was during a Black Swan event. Other than that, it's just been smooth sailing since. We've had some months that are slow. We've had some months that are absolutely monstrous, right? March was a monster month. Great start to quarter. Great ending to quarter one. for this year. And then so far, these last couple of months have been really solid. April was fairly slow, but we got some really good times out of May and so far June. So I'm really happy with that. And also, I'm going to be going over all the trades in more detail for everyone for our Q2 report card video. I do a report card video every quarter end. So if you're interested in seeing more details on the trades that we've done for both stocks and crypto, that video will be coming out the end of this month or the 1st of July, around there. So overall though, with Bitcoin, I am really happy we got into a really good long here, and we're just gonna sit here. And I've been saying for quite some time in the previous recaps and also in some of the live streams I do in the Discord, this is a weekly breakout, guys, right? So I warn people, be very careful shorting it. Not saying it can't go down. Of course it can go down. It's all probabilities, no guarantees. But you're really asking for trouble, and your risk really sucks, and the reward really sucks, right? It's just not worth it, in my opinion. So if you know how to read risk reward, there's really no reason to be shorting here, because what are you looking for? You're looking for this to actually invalidate the whole move. The odds of that are super low on the weekly. It really is. It really is. And if you're looking for that to happen on the weekly, you have a lot of days in a week. Okay, this can pop all the way up here today and then tomorrow, and then on Friday this can dump down to here. So how are you going to survive that on the weekly? It's just such a bad decision. So that's why when it comes to weekly breakouts, you just want to stay out of the way. If you happen to be blessed to be in it like we are in the swing trade servers, then hey, you ride the move. You ride the move and you just stay out of its way. Okay, so the hard part has ended. Okay, I shouldn't say that. It is pretty hard to ride winners, but it's a good problem to have. Okay, so we got into a good position. Now we're just gonna sit. Now where are we going to next? In my opinion, like I mentioned in the last recap, we should see a consolidation continue here. I am looking for continuation in the consolidation here, and then from this consolidation, which is likely to have a bull bias, if it validates in that direction, we want to see that move firstly to about 33,000, 32.9, so this level right here, and then eventually move going into the 34s, 35s, and then we'll have to see how price action develops as we're overtaking this consolidation and then trading into this imbalance over here, which actually is a huge monthly fair value gap here. Okay, so we'll have to see how price action interacts there. In my opinion, if the Dow is as bullish as it looks and it validates that bullishness, crypto might go much higher than we all are thinking at the moment. So we have to be very vigilant, because we could be in a massive opportunity in regards to crypto. All right, we may not know it yet, so we're gonna take our time. We're gonna be patient. We're gonna be slow. And like I always say to the members, we want to transition away from retail every time, right? Because we're retail traders, right? If you're trading retail. If you're trading not for an institution, not professionally, you are trading for yourself. So you're a retail trader, but that doesn't mean you have to trade with retail. So our job is to slowly transition away from retail. So slowly buy as they are quickly selling, and slowly sell as they are quickly buying. And right now, I have not seen any hint of retail quickly buying yet. Okay, we have some here and there, but to me, it's just smart money still chilling, still holding out, and we're gonna do the same, guys. We're gonna ride it until we start seeing that euphoria going into liquidity zones, and then we're gonna slowly transition short, slowly deleverage our positions out. Okay, that's how we got to do this. It's how we've had this win rate. It's how we've done this. Okay, it's how we've had this high win rate with also high edge. Okay, it's good. It's one thing to have a high win rate and low edge, where it means like you win a lot but you don't make a lot. Our edge has been pretty freaking high for this win rate. It's been incredibly high, actually. So we have to keep the same energy. Okay, so just keep that in mind. Again, if you are part of the Discord, make sure you always send me a message, whether it's DMs or on the Discord, if you have any questions about anything. And if you're not in the Discord, again, I'll tell you, be on the Discord. There's no point in not being on there. Again, you're going to meet a lot of cool people, and I do a lot of free stuff for everyone, even if you're not a premium member. And if you'd like to be a premium member, check out those services. You'll find the Patreon down below. Or if you want to pay and go through the crypto option, you'll find the details for that in the Discord in the premium links room right over here as well. So you can always do this and go through crypto if you're interested in any of the services, if you don't want to go through Patreon. All right. And quick before I sign off, because I just saw this link for MEXC here. So I do have a referral link for MEXC. However, I want to make this very clear. I've heard rumors about MEXC via Twitter, so take it with a grain of salt. I'm not claiming to have any inside information here. MEXC might be having some funding issues. I don't know if it's true, so that could mean insolvency. Again, don't want to spread panic or fear, but I do want to inform in case it is true. Again, I don't know. But this is a good reminder, no matter what exchange you use, whether it's Binance or MEXC or anything, you want to make sure never to leave too much money on any of these exchanges at any one time. Get used to paying yourself out. No one else is going to pay you. Make sure to always keep what you need and not what you want on the exchanges. If you have good profits, take it off. You have too much money exposed, take it off. There's no point keeping it there. If you need more money at any given time on the exchange for whatever reason, you could always just send more. You don't need to keep it on there. You should get into the habit of when you make money, God willing, you take it off and put it somewhere you deem safe. Okay, so again, just if you haven't done that, if you haven't taken profits yet and taken them off the exchange, consider this your reminder to do it. Do it right now if you feel uncomfortable, and if you haven't done it in a while, you have to get into the habit of paying yourself. All right, guys, that is it for this recap. Again, if you have any questions about anything, you can message me on the Discord. You can leave a comment on the YouTube video. If you disagree with my analysis on anything, make sure to leave a comment. I'd like to hear your opinion. And if you haven't joined those services, like I said before, make sure to check them out. They might be something you're interested in. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.